Well, if you've just tuned in, well, I'm afraid I don't have good things if you're a long bull. Dow has registered its biggest hit uh, in a long time. In absolute numbers, this is the biggest intraday fall for Dow. Asian markets, yesterday they survived the fall, or yesterday Asian markets reacted in a measured manner to Friday's sell-off in Dow. But now, I guess panic and somewhere sentiment has reversed. Sandeep Tandon joins us, founder of Quant Group now. Sandeep, you've been calling for a global correction for a really long time, and now global correction is haunting us.
Hello.
Yes, Sandeep, you've been calling for a large correction for a long time, and now finally
Yeah,
that is coming true.
correct. See, we have been talking about that from 2017, mid 2017, the global volatility expansion phase start, which can go up to 2020. And within that phase, we have said the best market which is going to peak out, or the market which is going to peak out first, will be the US. And we are calling it as one of the decade top. Okay, so we have been writing for last few months. Trading top or decade top is very close in US. It's very difficult to time it perfectly because liquidity parameter, if you look at the quant liquidity index, peaked out somewhere in the month of May 2017 itself. And the real impact of liquidity you only realize only after 8 to 12 months. Sometimes it will take 15 months also. So liquidity pain is now visible. We are very early to talk about rising inflation. Last year onward, we are writing inflation will going to rise substantially, and so is the case with the interest rates also. Now looking at the second parameter, which we look at the risk index. Okay, so the risk appetite is not about the market fall risk index. Like we have a quant risk appetite index. Okay, the quant risk appetite index was one of lifetime high. Okay, for US market last year. Okay, and this year also it has the way global market was risk appetite, particularly Asia was declining, where US is still rising. Okay, so which is another sign the risk appetite was very high out there, and obviously valuation was expensive. So look from right from liquidity, risk, and valuation, all three parameter US market was giving a signs of topish. Now you come back to maybe the relevant question: what happens to India? What happens to Asia? Okay, so I link with this. The liquidity parameter is still increasing in Asia. The quant risk indicator or risk appetite indicator are still low, okay, which clearly indicate that money will shift from US equities or DM equity, if I have to call it, and within DM, more particular US, will shift towards Asia, and within Asia, we remain positive for Japan also, we remain positive with China and India. We believe 2018, last year also I said on your show, 2018 belongs to Asia, and with a lag effect of maybe few months whenever US market peaks out, you will see India market and Asia will be decoupled from US. Okay, so with a lag effect, may difficult to quantify what could be the lag timelines. Maybe 2-3 months timelines, the decoupling process starts, and India will be a clear winner from a longer term perspective because quant euphoria index has not peaked out. What we have seen in the month of January, early part of January, end of December, there was some amount of euphoria in terms of volumes, extraordinary volumes. Maybe the volumes were in a number of share terms or number of trade terms were even higher than 2007. Okay, whether you look at the Nifty basket, whether you look at F&O basket, or you look at the BSE 500, or whichever segment you look at, majority of the indices basket volumes was a peak, which was showcasing extraordinary retail participation, extraordinary HNI participation, which is a signs of a temporary top sort of thing. So which we are witnessing right now. Market was looking for some excuse. Budget and global market has given that excuse. But I think this is an opportunity to rebuild your exposure at appropriate time.
Sandeep, the big question this morning is what should investors do in this global panic which is setting in? Do you just throw in the towel, sell it all off? Do you cling on to quality, maybe start, buying on these current dips that the market is seeing? Or do you wait it out, wait for things to settle down, keep your list ready because the market is going to go down further and you will get better entry points?
So obviously, when you see this sort of sell-off, it creates a lot of nervousness among investors. My recommendation is that this is not the time to do anything, except that if the people have compulsion who have leveraged long position, those are the guys will be forced to cut down and prune down their exposure. That if you look at purely from investor perspective, I don't think one should be in a hurry to buy anything today, but it's a typically 3 to 5 days cycle, so it will take at least 5 days, 3 to 5 days for you to see some massive sell-off which is going on. So today is the third day. Okay, it started on Friday, Monday, and now today is the third day. My personal view is that by end of this week, things should settle down because our Quant fear index has started spiking. It is nowhere close to the all-time high, but it is rising very sharply. Okay, and whenever we have seen, like if you recollect November 2016, also the demon effect happened and the fear index spiked to the second largest fear index. And that's the time we came out and said a 25 to 30% rallies on cards. The whole world was very bearish. Okay, so I'll wait for our fear index to spike sharply, which can happen in next 2 or 3 trading session, and that will give us a sense of that bottom could be near.
Deep, appreciate your time. Thank you for joining us. I want to quickly mention if we have the data for ET now, greed and fear index. Actually, it should be called as today not greed and fear, but fear and greed, because greed completely has evaporated.
Fear and fear, right now.
These are that's equity as an asset class will remain volatile. That is the biggest truism. When there are people and bureaucrats who make a comment that it's easy to make money in equities, I think that's a very uneducated comment, because the reason why you make higher returns in equities because the nature of equity is that it will never move in a linear line. I mean, 2017 was this odd year out where we had a linear rise, where we had no spikes in volatility. That's not going to last. This is the reality. Spikes, ups and downs, panic, and then euphoria. It's all part of the same cycle. You'll have euphoria and then you will have a correction. So look at the headline which we got from Dow. The best ever start for 2018. That was the headline which had a shelf life till 31st of Jan. What is the headline today? The highest intraday fall in the history of Dow. So in a matter of 7 days, the headline or the positioning of Dow in the sentiment has changed completely.
Yeah, but like Sunil Singhania says, the best monthly start to a year is followed by the biggest point drop on Wall Street. He's saying Indian markets will follow in the near term. However, for all those who felt left out in 2017, opportunity couldn't have come so soon. So get your buying list ready between now and the next 3 to 4 months. So while he's saying that this is a good opportunity, you should buy this dip and decline, he's also saying that somewhere hinting that this weakness could last perhaps 3 to 4 months. It could be aggravated.